based on the CNN Fear and Greed Index, is still at fear and close to extreme fear. That's I think 3rd of June here. So it's very much still has a lot of the fear involved. So means that a lot of people still stands at the bearish side because like I say, if you just look at the graph, like look at the chart, I think it's very clear that it's still a bear rally. That's nothing wrong with that. Is totally correct. But probably some of them doesn't realize that this is a change of character rally, and is probably they forget the previous accumulation as well. But of course, these are still in the early stage. We still need to look for clues along the way to confirm that. But so far, the background is still bearish and with a lot of the fear. So I think this is kind of a good thing if you consider that, mainly because whenever there's a lot of the fear and also background is kind of bearish, means that there are still a lot of the people on the sidelines. They still hasn't have not participate the rally yet. So I think one of the intent of the rally could be to just to suck them in so that they could just participate the rally and just create a formal fear of missing out for them so that they can just jump in. So let's take a look next slides. Clearly, there is presence of the supply, especially after the rally up. So we definitely see that there's presence of the supply. So I updated in the Telegram group, mentioned that there's a price reactor of the supply zone with the increasing of the volume yesterday. I think I referred to the first day after Friday, probably I think it's Tuesday. And so far, it's still holding up 41. So 41 is actually the key, which you will see it shortly because there's quite a lot of the interaction at this key level. So yesterday could be a test bar. So I'm referred to, I think on Tuesday, there's the first bar after the Friday's rally. So testing into one half of the spread bullish so far. Today will be reveal more hints. So actually should be become to last week. So the whole week actually painted a picture for us to consider into the coming week. And yet, don't forget there's a test waiting for the upswing of the low since 20th of May, which is yet to come with more pronounced downward results. So there's more testing coming for sure. So I just think that maybe a reasonable level would be about 4,300. So or even more, which I'm going to show you the point and figure chart as well. So the ease of movement on 26.37, which is I think Thursday and Friday. So those two big bullish momentum bar that could really provide some more fuel in the tank with more upside to come. So eventually failure. So far I think 40, 50 with a spike of volume should be one of the scenario that you need to pay attention to for the failure case. All right. So yeah, before we do that, let's just jump to the chart. So let's take a look here. Okay, so here it is. This is the S&P 500. So I talk about there's a lot of the supply absorption while there's accumulation on the way down as reflected on the volume last week or maybe the week before as well. So finally, we see that there is a rally to confirm that, and this rally of the low on I think that's 20th of May is definitely a change of character. So means that is actually the biggest up wave within this down channel that actually started in April or end of April, sorry, end of March. So definitely something's different this time. So this is the biggest up wave as a change of character. So just to change the environment, change the trading environment of the downtrend into at least a trading range. But at the moment, the rally is still unfolding. It could be still keep going up. So, okay, Stan say, what phase do you think we are in now? Okay, I think that's a great question. So, what phase do you think we are in? To answer this, probably we start from here. So there is a distribution top followed by a sign of weakness. So there's an automatic rally. I think I labeled this selling climax, automatic rally, secondary test, forming the trading range. Okay, so after the breakdown, so I talk about this. I think that's reference to the Russell 2000 as the bearish leading indicator. So just to anticipate something is going on and there's a sharp move coming. So which is this? There's a sharp move, and we found that there's a presence of demand. So the rest is just a continuation of the stories from last week and also the week before as well. So if this is a redistribution, so that is actually a sign of weakness at that time. Okay, but I put it here, whether it's a sign of weakness or a spring. So how do we confirm that? Right now, we still have the range here. So the range is from 41 to 46. Okay, the range is still valid, but the sign of weakness didn't have any follow through to the downside. Instead, it's kind of having a shakeout or a deep spring, maybe a level 2 spring, or level 3 is called probably a terminal shakeout, something like that. It doesn't matter, but we didn't really see follow through to the downside. So instead of having a sign of weakness, inability to rally, forming a LPSY, and then continuation to the downside, breakdown, and then markdown. But what we have here is a spring and then followed by a rally up. So that in itself is another structure which I will explain shortly, an accumulation structure. So, but if we consider this big structure, the trading range, so instead of call it a sign of weakness, then since it just didn't materialize and the price actually be able to come in above, could that be a spring? So far, that looks like a spring to me, although the spring might be a bit deeper, or maybe you call it a shakeout. So that could be a spring followed by a test and then eventually just commit back above this trading range. So that could really change it to some kind of the spring type action. Okay, at least that it actually commit above 41. So that's why I mentioned that 41 is actually quite important, although there are quite a few levels ahead as well, like 42, this whole supply zone as well. So far, I believe that if we really want to think about the phase, certainly we are not in the phase in markdown, and instead that could be just a phase C, or at best that is still a phase B range. So it could be still like this is A, that's B, that is still minor sign of weakness or sign of weakness, and it could be still keep consolidating within the trading range. So that should be still at B. Okay. So Stan say you have a point and figure target from the spring low. Yeah, I do have. I will show you shortly. So just bear with me for the moment. So far, we do have a commitment above, and if we look at this, so just purely from maybe last week action, because I think I talked about this rally, so I won't repeat that. So last week is probably a bit unusual. So there is probably analog for this rally. I think probably this is quite suitable. Okay, so March rally compared to June's rally. Okay, so in terms of the rally, we do have a kickstart. So this 2 bar, and we have this 2 bar to kickstart, commit above. So commit above. But there is a key difference here. So unlike the March rally, which we do see there's a lot of the ease of movement to the upside. So this whole chunk here is the ease of movement. So that means it's the low volume, and it didn't really require a lot of the demand or aggressive demand to push price up, because there is just no presence of the supply, or very low presence of the supply. That's why with the low efforts behind, it can really just push a price up and create a uptrust in March. Okay, but here there's something different. Right after the push up, right after the rally, testing into the supply zone. So this big bar is the supply zone, and suddenly we see there is emergence of the supply. Look at this 2 bar. So increasing of the supply with this 2 bar. So immediately tested into the supply zone with an increasing of the supply. But what's the results? So the results so far is quite bullish. I would say is forming a shallow type of the pullback or backup action. So test the access line 41, or if you want, maybe they could just drag to 4070 or even 4050. So far with the increasing of the supply, and I didn't really see a lot of the downward movement, so suggests potential supply absorption. Okay, so right after that, we do see another test on last Friday. So with a decreasing of the volume, decreasing of the supply. So if you think about this as a flag type of the pattern, so bull flag, so that could be the type of the signal that we could looking for, because if this is a true supply absorption, then I think it should really just resolve itself out from this trading range with a decreasing of the supply. So after that, we should really just see a push up and then to test further upsides at probably 43 or even 45, which I'm going to show you the PNF for the price targets. But anyway, until now, until we see a meaningful reversal or a value reversal, means that I want to see a failure case with a spike of the volume, increasing of the bearish spread, and coming below 4050, then the swing is still up. Okay, it's still upswing. Although I know that last week is probably quite frustrated with the price going nowhere, consolidate right at the top here. But so far, if you just purely look at the price and the volume, it still shows potential of the supply absorption scenario. So that's something that I think could be bullish about. And if we compare March rally to the current rally, there's a lot of ease of movement here, which didn't show up here. That's why I just kind of anticipate if we really have this supply absorption completed, then I think it should really build up more causes and to have more upside ahead. So that could be really a better rally compared to March. All right, because if you think about this, when there is kind of a supply coming out at this level, I think it's quite reasonable for the supply to come out because it's just at the supply zone or the resistance. So I won't be surprised there is supply coming out. Plus, at the moment, the sentiment is bearish, and a lot of people will tend to think about, well, we just want to sell into strength, this is going to fail, things like that. So I think it makes sense to have that kind of a mentality. But if you look at this, with increasing of the supply, but we still haven't really get a lot of the downward results. So the effort versus results kick in. So suggest the potential supply absorption to be confirmed. So how to confirm that? The commitment above, that should be the final confirmation with decreasing of the supply if we can just hang around here for some time. Okay, so at least so far, it's still holding up the gain. That is the bullish sign. So if there is really a breakout happen, likely I think the rally, the current rally should be better than March rally. So that will really surprise a lot of bear if that really happens, because I think the first level is very obvious. It's about this level 43. So, and also this breakdown bar. So you can say 43 to 44, that's the zone that is going to test. So tested, probably have a reaction. So if there's continually as a supply absorption coming out and without pushing the price down and have a meaningful reversal, then likely it could go all the way up to test upper level at about 45 or even 46. So that would just kind of go back to the analog that I showed you last Sunday using 2015-16. That's the analog that I refer to as a kind of a spring versus, spring followed by a sound strength rally. So far, I think short term we're still in an upswing. There is nothing major or nothing threatening about the reversal, and at least we still see the shadow type of the pullback. All right. So back to the point and figure. So let me show you the point and figure. Okay. So another thing to think about the current pullback as to build more causality for the higher target. So far, if you look at this point and figure chart with I calculate all the way back to probably around 12 or even 9. So that's kind of have the projection all the way to about 4470. So if you look at the chart, 4470 is right at the resistance level. So it's just here, okay, close to 45. So I think it makes sense that it just coincides with the resistance in the vertical chart. And if we have a successful breakout here, means that this overall structure, like sign of strength rally, backing up, and is successful, there should be more upside ahead based on the causality. So I also project another count. So that's kind of the max count. You can definitely tell with this, that's annotated in orange. So pretty much just this whole chunk here. Okay, so this whole chunk. So that could go all the way to about 4890, close to about 4900. Means that it could go to all-time high. So 4890 is that definitely an all-time high. Of course, there's another level at about 46. So means that if you just look at this chart, okay, 46 is just right at this resistance level, and 49 is definitely above the previous level all-time high. So first level 4480 is somewhere around here. So second target is about 46, first target at about 45, and eventually can go all the way up to all-time high. So I'm not saying that now we finally found the bottom, here's the bottom, and it's going to go to all-time high. So no, this is not what I mean. What I mean is there is enough causes built right at this portion. So there's enough causes built right at this portion based on the volatility involved in the S&P 500. That's why it can definitely have the fuel inside the tank to project all the way to all-time high level. So that's what I mean for the price and the point and figure chart. So if you just want to use the vertical chart, I think that's definitely would be a lot more suitable as well. So just trade it swing by swing and bar by bar. That will be more suitable, especially in this period as so volatile. So stance that would extreme bearish sentiment hinder the rally compared to March, making a rally lower target? Well, that's just kind of the opposite, like I say, because of the kind of the extreme bearish sentiment is kind of better or good for the market. Means that there is so far less people to participate. So they really just stand on the sideline, or they're probably still shorting. So either they could probably provide some kind of the short covering, or they might need to flip their position into long in order to participate in the bull run. But when will it happen? I think that will only happen when you actually break 43 to trigger that the formal behavior. So because right now, a lot of people will think, well, it's probably going to fail here. And then, well, that certainly is one of the scenario. It fail right here. I have no problem with that. If it fail right here, then it fails. It probably will just go back down and come back to have a test. But if it didn't, if this is a supply absorption, likely it should just go higher to test 43. If 43 can just break easily, then it should trigger the FOMO. So people will think about like, well, that probably looks more optimistic and that should really participate the bull run. Or maybe at that time, that should be more headlines around like, well, that could be the final bottom. The market bottom is here. So we really need to see that in order to see some kind of the behavior shift or behavior to change to very optimistic and bullish. Yeah, that's right. Short covering will come in more likely at 43. Yeah, that's right, Stan. So I think that should be a reasonable level. So far, based on just the price and also the volume, I believe that we still probably have more upside until we see a failure, which is a break below 40.50 level. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.